When you look at the crypto market, it's really a story of boom, bust, and rebirth. So if you're an investor or you're just trying to get your head around this crazy space, understanding its historical cycles isn't just helpful, it's absolutely essential. In this explainer, we're going to break down that whole journey, from Bitcoin's creation all the way to the promise of a decentralized future, to give you a clearer lens for making your own informed decisions. All right, so first up, we'll dive into where Bitcoin all started. Then, we'll track the wild ride of the great crypto boom. After that, we have to look at the devastating $2 trillion crash and what caused it. And from the ashes, we'll see what's being rebuilt now under the banner of Web3. To wrap it all up, we'll pull everything together into a practical framework you can use to think about this market. So, where did all of this even begin? It's important to remember this wasn't just about creating a new asset to trade. It was about imagining a completely new kind of financial system. Okay, so picture this. It's 2009. The mysterious Satoshi Nakamoto drops Bitcoin on the world. The core idea was nothing short of revolutionary: a decentralized digital currency. Think about that. No single bank, no government could control it, mess with it, or stop a transaction. It was built to be a peer-to-peer system, letting people deal directly with each other. And the engine that makes all this possible? That's blockchain. Just imagine a public digital record book that's copied and spread across thousands of computers. Every transaction gets added as a block, and it's cryptographically chained to the one before it. This creates a record that's permanent and basically impossible to tamper with. It's how you get trust and security without needing a middleman.
So with that foundation laid, what started out as this kind of niche experiment for tech nerds and cypherpunks began to just snowball into a massive global phenomenon.
And man, what a phenomenon it was. From being worth literally pennies, a single Bitcoin rocketed to a mind-blowing peak of over $60,000 by 2021. This wasn't just growth, it was an absolute explosion that yanked crypto out of the dark corners of the internet and threw it right into mainstream financial news and, conversations at the dinner table.
But the boom wasn't only about Bitcoin. A new player came on the scene, Ethereum, and it had a totally different vision. See, while Bitcoin wanted to be digital money, Ethereum used blockchain to enable something called smart contracts. Basically, think of them like contracts that run themselves, all written in code. This just blew the doors wide open for all kinds of applications to be built right on the blockchain.
And man, did this spark an explosion of innovation. Suddenly, you had thousands of new cryptocurrencies or altcoins popping up everywhere. We saw the rise of NFTs, these unique digital tokens representing ownership of stuff like art. We're talking about digital art selling for millions. And then this whole new concept of decentralized finance, or DeFi, showed up, which aimed to rebuild things like lending and exchanges, but without any banks.
But you know how these things go. When you have that kind of crazy, rapid growth and hype, a correction is always just around the corner. And the hype that pushed the market to these unbelievable heights was also hiding some pretty big risks. Eventually, that bubble had to burst.
And the scale of this downturn was just immense. In what everyone started calling the crypto winter of 2022, an estimated $2 trillion in value just vanished from the market. This wasn't a dip. It was a brutal, brutal crash that completely wiped out fortunes and shattered a lot of people's confidence.
So what happened? Well, it was kind of a perfect storm. You had the wider economic downturn hitting risky assets hard. But then, the crypto world had its own internal disasters, and the biggest, most shocking one was the collapse of the exchange FTX, which was wrapped up in allegations of massive fraud. To top it all off, governments all over the world started taking a much harder look with new regulations, which just added to all the uncertainty.
The FTX scandal. This wasn't just some company going under. It exposed some really deep problems. As one analysis put it, the whole thing was a stark reminder of the dangers of fraud and, frankly, terrible risk management in a space that didn't have a lot of rules. For investors, it was a painful lesson in what can happen when you trust your assets to platforms that aren't transparent or regulated.
So after a crash like that, you'd think, okay, that's it, it's over, right? But that's not what happened at all. Instead, the focus started to shift away from all that short-term speculation and toward long-term building. This is the rebirth part of the cycle.
This timeline really lays out that cycle we've been talking about. You have the initial innovation, then a massive boom, followed by an inevitable bust. But the story doesn't stop there. Proponents will tell you these crashes are actually necessary. They're shakeouts that clear away all the hype and scams, and they allow for real, durable innovation to take root.
Many in the space are now looking toward the end of the decade, predicting this is when the technology will finally hit mainstream adoption.
And the big vision that's driving this next phase is this idea of Web 3. The goal here is to use blockchain to build a totally new version of the internet, one where users, not giant corporations, actually control their own data and their digital stuff. Imagine social media where you actually own your content, or financial services that don't need a corporate middleman. That's the ambitious goal that keeps the real builders in this space going, no matter how volatile the market gets.
Okay, so we've walked through the whole chaotic history. What's the big takeaway here for an investor? How do we put some structure around these incredibly dramatic cycles?
It's all about recognizing this cycle, this pattern that just keeps repeating. First, a groundbreaking new technology appears. Second, massive hype drives a speculative boom. Third, a painful crash comes along and exposes all the fraud and the weaknesses in the system. And finally, in the quiet after the crash, the serious builders get back to work, innovating and laying the foundation for the next cycle. Understanding that framework helps you look past the day-to-day noise and figure out where we might be in the bigger picture.
And this all brings us to the fundamental question that every single investor in this space has to ask themselves. We've seen the cycle: creation, hype, destruction, and then rebuilding. You've got this potential for world-changing innovation right next to the very real possibility of catastrophic loss. So the real challenge for you is to decide how you balance that profound risk with that equally profound potential for reward.